Hello, and welcome to It's Only Money with financial advisor Scott Brown and with EdgewaterFamilyWealth.com. If you need to reach Scott, you can call 407-648-1881. And this is a brand new show here on Real Radio. Hey, Scott.
Good morning.
Good morning. I am so excited about this because if I know Real Radio listeners, they need financial advice.
What are you trying to say?
I'm saying I'm a Real Radio listener and I need financial advice. It's very cool what we're going to do here, and I really like where you come from in this world. You have everything you've said to me. You've explained so clearly that I walked away feeling like I know things.
Well,
which is nice.
It's good to know things, or at least think that you know things, right? Which is the human condition. No, I mean it's as you and I have discussed several times. This is not rocket science. If it was, I wouldn't be doing it. That's for sure. The goal in 35 years of doing this and writing books and things of that nature, in fact, I was on radio 20 years ago. The goal is just to simplify. As you and I have discussed, people love to make things sound complex. It gives them some kind of credibility, or so they think. So if you speak over people's heads, the first thing that'll happen is they'll be embarrassed to ask questions. So I think a lot of people in my business are prone to jargon, not because they're intellectually above the people they're talking to, but because it makes them sound like they are. I've said many times, any idiot can make the complex sound complex. It takes a little bit of time, patience, and intellectual capacity to make something that's complex simple. And we don't go to the doctor so they can look at our charts and then start talking about chemical compounds and physiology and your leg is broken and you need to have it fixed. Okay, I get that, right?
Absolutely.
So that's what we want.
Scientists always have this problem where they're super good at their job and they know exactly what they mean, but they speak in a language that an every man can't understand. And the famous scientists are the guys that can break it down and basically explain it like they're talking to a fifth grader. Like, when I listen to Neil deGrasse Tyson, he knows way more than what he's telling me. He's basically giving me the coloring book of quantum physics, and I like that. I feel like a better person from that.
No, there's no doubt that's what makes him appealing. That's why he's on television, right? That's why we see him everywhere, is because he has that unique ability. All the scientists get it. They understand all of the dynamics, whether it's climate change or all the things we talk about. They understand it. It's just communicating it in a manner that the rest of us idiots can figure out.
Yeah, and it's got to happen with the financial world. I mean, how many scared people do you deal with that by the end of you talking to them, it's just a broken leg there,
Yeah, I mean, that's my job, is to make sure that people are comfortable and feel protected, basically. I mean, it's no different than your family. When somebody comes in to see me, yeah, they're scared. Sometimes they won't admit it. They won't admit they don't understand it. They won't admit that they're afraid of the markets. They won't admit that people say crazy things like, "Oh yeah, my grandpa put money in the market and it killed him." Well, that's probably an exaggeration. That's probably not really what happened. But making people understand the complex is really my job. Making them comfortable. I mean, I'm a part-time therapist, I suppose. I literally used to have a couch in my office that nobody laid, well, some weird people laid down once or twice, but for the most part, they just sat on and they do, if I do nothing else for a person, is to make them feel more comfortable with the process and finances at large, then really I've done my job.
Well, let me ask you this, because every other time I turn on the TV, the word inflation is thrown in my face right now. I hear, hey, if your money's just sitting there in a bank account that makes 0.02 cents a month, you are losing money if I'm doing that. And that's a scary thought. But then what do you do, Scott? Because my savings account says it gives me money back. I get the little statement every time. So I'm winning inflation, am I not?
You are not.
No.
Yeah. Unfortunately, this case, the media is correct. Inflation is a problem, and why we are at an annualized rate of 7%. So if we look historically at inflation, we know the numbers are around 2, give or take, historically. Tammy's sitting next to me here, my CFA candidate, agreeing with me because whenever I make a mistake, he'll swat me with a paper. But inflation is running at about a 2% clip historically, and now we're at 7. People say, well, why is that? And then, of course, the political games begin as to who's to blame or who pushed the wrong button or nominated the wrong person. The reality is COVID is largely to blame because of supply chain issues and, companies can charge a higher price, so they do, number one. But the other part of it is the materials are going up, labor costs are going up. And to be fair, I think most people would agree it's about time labor costs went up a little bit. And now companies are adjusting to that. So some of this stuff is, as the Fed would say, are these things are transient. Some of these things will probably go away. Will they all go away? They will not. If we settled at a number around 3 or 4, that would be historically high, but it certainly wouldn't be where we are today. So the argument that you're hearing, Ryan, is that I used to pay $2, $5. Well, I don't even know what a gallon of milk is anymore, but whatever a gallon of milk costs, I don't drink milk.
I don't drink milk either.
Yeah, I'm lactose intolerant. Nobody wants that. You don't want to be around me after I drink milk. Let's be clear on that one. But
now there's good advice.
There's good advice. That's the first piece of good advice that anybody's gotten off this show. But, the cost of milk goes up. That has an effect on your overall ability to save, to live your life, to prosper, to build wealth. So, yes, inflation is a problem. If you have a bank account now, a savings account paying you, like you said, point something, 0.05, 0.0 whatever.
Mine's laughable. Like when it tells me how much I made.
Yeah, they're all laughable at this point, but you can't get too caught up in that. That is the reality. So if you say, well, what do I do about it? That's where people start to get goofy and make mistakes. They say, well, I heard online that if I move my money over here, I'm going to get 5%. Well, okay, well, let's back up. So the prevailing rate at the major institutions in this country are at 0.02, and you think you're going to get 5 because your buddy told you how to do that. And the reality is maybe you will get 5, but maybe you'll lose 5 as well, because the reality is anything that's paying you such a disproportionate return, so much more in short than you could get at a normal quote-unquote place, there's got to be risk inherent. There's no free lunch. There's no easy way to do it. And the other thing I say to people is sometimes people get bent at me because we've got a cash position. They say, well, cash is gathering dust. It's not doing anything for me. That's true, but sometimes you win by not losing, right? If we're going to go through a downturn, having that dry powder available to you to take advantage of opportunities in any market, bond market, stock market, whatever it is not always a bad thing. So, you say to yourself, well, I'm losing. But if your other option was I take my money out of cash and I put it in the stock market, and I'm not advocating one way or the other, but then the stock market drops 15%, weren't you better off having left that money in the crappy savings account that we were just referring to? So again, sometimes you win by not losing. It's really needs to be part of the long-term picture that you've built for yourself. I know it's boring. You can't go to the cocktail party and hold your martini in your hand and well, yes, I earned point something this week on my saving. Nobody cares.
Yeah.
Right?
You're not impressing anybody with your 0.02% savings account. I learned that in the dating world.
Mm-hmm. Yeah. You really should stop bringing that up.
I can't help it. It seems like a 0.2 seems like a big number in my world, but it's
oh boy.
Every little percentage counts.
Oh, here we go.
But it's
things have gotten off kilter already.
I apologize. I'm supposed to keep things on the rails here.
Yeah.
There's just so much, especially with the advent of the internet. Like when my parents and uncles and everybody invested in the stock market, you had to go to a guy and they did all this stuff for you. Now I can make a life-altering decision from my pocket.
I know, it's so awesome.
It's awesome and it's terrifying at the same time because I buy crypto I call it fun, and my fiance calls it dangerous. Mm-hmm. But I'm always like, I'm young. I can see what happens here, and if I have the money to lose, it's literally like I'm going to the Hard Rock sometimes. Yeah. Like it's like I got the money to lose, let's see what happens. And there's been great days, and then there's been lately, which is a fun thing to do. But when you said that, my dad or whoever invested in the stock market and it killed him, I have that story in my family. Like my uncle famously, and it was brought up all the time, that he invested in the stock market 30, 40 years ago and lost all of their money. And then they had to spend the rest of the time recovering. So it's a very, daunting topic to get into. And I see the fear of people when they try to approach it.
Well, first of all, marry that woman who said crypto's dangerous immediately before you blow it.
Yeah, it's not a good decision I made.
Yeah. So the reality is no one put all their money, at least in recent history, in modern history, since I'm 57, so as far back as I go, nobody lost all their money in the stock market. Somebody did something really silly at a really silly time and reacted poorly to, maybe they put the money in 07, right?
Mm-hmm.
And then the market dropped 30-40%, and then they sold in 08, right? Had they not sold in 08, they'd have tripled their mony by now, theoretically, if they had the S&P 500. Am I right, Tammy?
Oh, yeah.
Okay. So that's what we have him for. Fact checking. If I make something up, please let me know. People have these stories, but there's more to the story. The stock market didn't do that. I tell a famous story in my book, or famous to me anyway, and anybody who listens to me, that when I started in the business in 1987, my dad looked at me and he said, "Hey, man, the market's at 2,000. What are you doing? It's not going to go any higher." And now the market's at 35,000. So, again, the market grows. It grows in fits and starts. Does it have bad moments in between? Certainly it does.
Well, I think it's great that you have a book, and I've perused trying to find the secrets, and we can talk more about that when we come back. You are listening to It's Only Money with financial advisor from Edgewater Family Wealth, Scott Brown. We will be right back. Welcome back to It's Only Money with Scott Brown, financial advisor for Edgewater Family Wealth. You can find him at edgewaterfamilywealth.com or by calling 407-648-1881. And right before we went to break, we were talking about a book that you had written. Tell me more about that.
Well, it is not a coloring book, and I know that's disappointing to you.
Has anybody tried that yet?
Now that I'm saying that out loud, I'm thinking, wait a minute, maybe we're onto something here.
Coloring
financial...
the A, the P, the R. Yeah.
Right. That'll be my next book.
If you don't put that out, it would be amazing because before we go into it, I mean, like, I don't know about you, but I got zero financial advice or education, rather, at school. Like, there's no version from elementary school to high school that ever taught me anything about money. It barely taught me about my human body at one point, but nothing about money. And I find that to be such a hindrance, especially when I was first starting out, like 18, 19, 20 years old. If somebody would have handed me a coloring book that I could kind of understand, I think it would be very helpful. So is your book super convoluted, very financial jargon, or?
Zero. So we'll come back to that education point. I think that's a fair thing to talk about. But no, I wrote a book, and the title of the book, and as you and I have discussed, is really marketing genius, if I may say so myself. The name of the book is "I've Never Made Anyone Rich."
Again, got to disagree with you on this.
You don't think that's good? It's not catchy enough?
People don't want to not be made rich. I'm already not rich. So tell me the thinking on that.
Oh yeah, I may need to rethink that. But no, I wrote the book purposely in simple terms, and not because I'm some complex dude and I have to dumb it down. It's just how I think. I think what's the simplest way to describe this to somebody so that they're not intimidated by it. So I wrote the book. The name of the book is "I've Never Made Anyone Rich." And the reason for that is I think historically people, when they seek out a financial advisor, that's in their head. People who are not currently wealthy think that financial advisor is going to make them wealthy. And then it becomes a leapfrog thing. Like I've often met people who've come to me. I'm their fourth advisor, which is never a good sign. And the reason I'm their fourth advisor is because the first advisor, they said, "Hey, I need you to help me get rich." And the advisor said, "Sure, I can totally do that," and which is a total lie. And then the next advisor said the same thing. "Okay, no, you need to leave advisor A and come to advisor B because I actually do know how to make you rich." And then that goes on for 10, 15, 20 years, and the advisors never make them rich. Thus, they never stop to think, wait a minute, it's not the advisor's job to make me rich, and I'll get into what the advisor's job is in my opinion. It's my job to make me rich. People they think, well, if I earn 10% instead of not, no. Listen, if you earn 10% instead of 9 or 7 instead of 6, that isn't a game changer for you. What's a game changer for you is that you stop buying or leasing a new car every 3 years, or that you don't buy a house you can't afford, or you add 1% more to your 401k again, not sex, Ryan, not sexy cocktail party, you're not picking up the ladies with that one.
No
I'm
one
sorry
wants to hear about my 2011 Hyundai Santa Fe, Scott.
Right.
No one does.
Right. I do. I'm all about your 2011 Hyundai Santa Fe. So these are the game changers for people. Is The person that I wrote about, this guy I met, he was originally from Morocco, and he was an Uber driver. I drive my wife crazy because I talk to all the Uber drivers. I want to know where they're from, why they're driving Uber, and like I get to know them really well.
I do the same game. Yeah. The game's called Become Best Friends Before the Ride's Over.
Yes. So I have a lot of best friends driving around right now. So I when I was talking to him, I'm like, well, what do you do? Why are you? And he was like dressed to the nines. His car was immaculate. We were going to the airport. And I said, well, what are you doing in Orlando? He's like, well, I actually live out in Haines City, and I work at I think there's a prison out there. And he works at the prison during the week, and then he drives Uber. And he told me he makes the same amount of money in 2 days driving his Uber that he does working at the prison. I don't know the mathematics behind Uber and how it works or how you get paid, but the bottom line is that's how that guy's going to get rich. He's not what we would consider a high-end, white-collar individual, right? This is just a guy grinding it out. But he's not sitting around going, well, if I earn 6% instead of 5%, then clearly I'll be a millionaire in 100 years, right? That this guy is doing the hustle, he's doing the grind, he's got a side gig. The other thing that people do is I call them the coupon people, right? You've been in at Publix and there's a lady and she's got 7 pages of coupons. You really just want your Hershey bar and your magazine? Like, come on, lady. And she's there for 20 minutes. And listen, people are going to get mad. They're going to say, well, everybody isn't rich, Scott. I get that. My point is not that she shouldn't do that. But a lot of people believe that if they go to the sale rack, that somehow is a big difference maker for them, when in fact, if they took that time to do a side hustle or to work a couple extra hours or save a little bit more money in their 401k or whatever, those are frequently game changers for people. So you can't save your way to wealth. And what I mean by that is you can't penny pinch or coupon your way to wealth. And we're led to believe that by companies, right? Like, bring in our Green Giant corn coupon and you'll be, no. I mean, it's a thing, but it's not a thing. So I wrote the book because I don't make people rich. My clients come in because they were entrepreneurs, or they were physicians, or they were attorneys, or they invented a widget, or they were just hardworking folks, and they saved, right? So I didn't do that. The person that walks in with $1 million or $2 million or $7 million or $500,000 for that matter, I didn't do that. And I'm not going to double their money overnight. Listen to me. I've been in the business 35 years. I promise you I know 10 of the top 20 financial advisors in this town in terms of assets managed. I do. I know them personally. Not one of them has ever made anyone rich. Not one of them has bought stock XYZ for $100, and then a year later the stock was $10,000, and then they made that's not a thing. The reason they'll talk about Apple, or they'll talk about, well, the Apple people who had the stock, the people who got it at the IPO, the people who were part of the company back when Steve Jobs was in the garage, those people that worked there, yes, they did. But the rest of us are not in that position. So an advisor's job, in my opinion, is not to make people rich. It's to help them, once they become somewhat wealthy, to move that money forward, to help them with tax implications, help them with administration. Should I be in an IRA? Should I be in a SEP? Should I be in a Roth? Should I be in a simple? Should I be in a 401k? Should I be in the Roth side of my 401k? What are the tax implications of buying a stock and selling a stock? We're at the end of the year. We have some losses. Should we take them? These are the things financial advisors do. They meet with the families. They help them give their money away if that's what they want to do. They help people accumulate money by showing them the path to do that. Some people say, well, a financial advisor is not worth it. And we could argue that. And I don't think a financial advisor is for everyone. And remember, that's what I do, right? so I feel like
marketing thing, Scott.
I know. We're going to have a class on this. There's going to be an intervention of some kind. I'm the world's worst marketer. But the truth of the matter is, this actually happened. If somebody called me in December of 2018, the market's down 20%. And they say, Scott, man, I can't do it anymore. I'm not. This is it. It's the end. This is the big one. You're too young to remember Fred Sanford, but he used to say, this is the big one, Elizabeth, and clutch his chest, right? It's not the big one, first of all. And if I tell that, in this case, it was a woman, and I said, listen, it's not the end. I need you to sit tight, take a deep breath. It's going to be okay, and here's why. What was that conversation worth? Because since that time, the market's gone up, what, Tammy?
Oh.
Since 18, what are we up, about 30, 40%?
Yeah, about 27-30%. Yeah.
All right, well, they're 20. See, he's exact. I'm making stuff up. But
Yeah.
it's you get it.
It's the fact checker. Fact checking with Tammy.
But what was that worth to that person? Let's say that person had $500,000. That's a $150,000 conversation. I'm not saying I do that every day or all the time, but that is the essence of my job: is coaching, managing administrative needs, talking about who's the beneficiary, who's going to get what. I know you don't like Jimmy, but you should still give Jimmy some of the money, that kind of stuff. So the reason I called the book what I did is because I think that people go into these relationships with advisors thinking that their job is something it's not. And the problem is, if you go to it looking for an advisor to tell you that they're going to make you rich, unfortunately, a lot of people find them.
Yes, I've unfortunately for my father, he was a big guy into these get rich books, and I mean he had. I mean, I'm not even exaggerating when I say 50, like easily just kind of laying around, and I'm going to put this nicely, Dad, sorry, the trailer that we lived in, because that's what, now my dad did invest in stuff and do that kind of thing, and at one point we did live in a trailer because he invested in something that completely fell apart, and then we had to live in one of the trailers that he owned. And I'll just never forget that feeling of like looking at all these books that say they had the answer, and then it's not like after that we were crushing it financially either. It always felt fake. So like when people do tell me they have the answer, I am wary of that. Like, so when you say you have a book, like I've never made anybody rich, I'm like, okay, well let's take a look at that.
Yeah, and clearly people are rich, right, or wealthy. I mean, you don't have to be rich. I like the term wealthy better. I mean, to rich reminds me of like the Monopoly guy or something. But, you know, there's people, there are regular people.
Now that guy I trust. You don't see the problem, Scott? You don't have a monocle.
Monocle is, now, if you can meet a guy with a monocle, I mean, like, I'm all in.
Absolutely.
If you got a monocle on, I'm all ears.
What was his financial advice? He said buy Park Place?
Where is that?
Where is that? I can't find it.
So, yeah, put hotels on Pennsylvania. All right, I'm in. So, no, short of the monocled guy, the reality is nobody has the overnight answer. And it's somebody who's, be wary of the naked man offering you a shirt. That there's a reason for that saying. And people are often find, well, there's this guy at work and he's always on the markets. Well, and he knows everything. Well, if he knew everything, first of all, he wouldn't be coming to work anymore, and he wouldn't be driving the 73 Pinto he's got out front. So, again, be wary of advice that is all-encompassing and going to be your savior.
All right, well, stick around. You're getting this stuff for free, listeners, for free right now over the air. And if you need to contact Scott, remember, just call 407-648-1881 or go to edgewaterfamilywealth.com. We will be right back with more It's Only Money. Welcome back to It's Only Money with financial advisor Scott Brown from edgewaterfamilywealth.com. Again, if you need to get a hold of Scott, call 407-648-1881 or go to edgewaterfamilywealth.com. Scott, we were talking a little bit earlier in the last segment about education and how I feel I got zero support for that. And I don't even know if it's changed. I mean, that was like 10 years ago. Even in college, if I didn't specifically take classes that were finance classes, I learned nothing. And it almost feels like that's done on purpose.
And I'm not a conspiracy person at all. I find conspiracies hilarious. But if I were a conspiracy person, there is a part of me that thinks, why are we avoiding the class in the 9th grade or the 10th grade about balancing your checkbook, about the difficulties of credit card debt? I remember when I was in college, I was a freshman, and I got that first application in the mail for a $500 Visa card. I was like, first of all, who's stupid enough to send this to me? Second of all, I am in.
Yes.
I am in with both feet. And so I filled it out. I still thought, it's not going to happen. And when that card came back, dude, for the Gator fans in the crowd, I was at CJ's that night buying everybody and their mother drinks.
Oh.
And I think it took me 3 years to pay off that $500. So we need an education system. Obviously, we could get into the education system all day long. I'll leave that to other people. But there are problems. And the problem is, what was the hardest class you took in college?
Man, probably international relations. Some kind of political science class. Those are always fun.
How often do you use that now?
Never.
Okay.
Never.
Do you balance your checkbook and look at credit card statements?
That I do.
Well,
the time.
maybe we should be talking about that then. Calculus, which I was never smart enough to understand, I think less than 1% of the college-attending population comes out using calculus ever.
Yeah.
And I'm thankful for the people who do, by the way, because they fly planes and build bridges and things like that. But very few of us use that. But many of us take it.
Oh,
right?
yeah.
Why isn't there a simple class on investing? This is a stock. I mean, I cannot tell you how many people have come in with theories on the stock market, and I say, well, explain to me what a stock is. And that's where the conversation ends. They don't really know what it is. They think they know what it is.
Uh-oh. Let me try this.
What's a stock?
It's a piece of paper that shows you have ownership in a company.
That's pretty good.
Okay.
That's more or less correct. It's a proportional share in an entity, whether it's McDonald's or Coca-Cola or whatever. What is a bond?
Like we're cool right now, bro. We got a bond.
Yeah.
I honestly don't
Right
know.
Right on. Yeah. So a lot of people that cannot explain the basics of the stock and bond market, yet many of them feel like they're experts in it, which is a frightening thought. So I do believe our education system is letting us down. I do think we should be teaching kids how to balance a checkbook. We should teach them what the meaning of debt is. You know, a young kid will come out and they'll lease a car, or they'll borrow, worse yet, while they're in college, and we can get into the broken university system, but they might borrow 70, 80, 100, 200 grand to get a liberal arts degree. Now, listen, I'm into the arts. Don't get me wrong. I love art. I love music. I love Picasso. I love Van Gogh, even with his ear getting cut off and all that. I'm good with all that. But I didn't need to pay 100 grand. There are books I can buy or check out at the library on that. Maybe we take some of that time and teach people the perils of debt, the perils of overbuying a house. You know, I think I tell a story in the book. I think it's in the book. I should probably read the book.
It's a good read.
Yeah. Not good at marketing, but I could read the book. The perils of, like, everybody wants to kind of show up the Joneses, you know, keeping up with the Joneses saying. And I remember my kids were in a private school here in town, and I was standing talking to another parent. My kid was probably like 6 or 7, and the guy standing next to me is like, yeah, we're getting a new house. It's going to, you know, it's going to, you know, we're having another baby, and we just need more room. And I thought to myself, this guy lives in a 3,500 square foot house. How big is this child you're having?
It's a giant baby.
It's the biggest baby of all time. But
don't body shame this baby.
That's how we think. And for this guy, he lived in a high-end neighborhood, and I'm sure he thought, well, you know, I gotta show the guy next door that mine's bigger than his, et cetera, and that's what he did. So, you know, we're all warped in this. So people are really into the keeping up with the Joneses thing. You know, they'd rather live in a neighborhood where they make 80 grand and their neighbor makes 70.
Yes.
Right? They'd rather, or they
so they're making 10 grand more
than their neighbor, but if they could make 90 grand, but their neighbor makes 100 where they make less, remember the 90's more than the 80,
mm-hmm.
They would rather live in the first neighborhood because compared contextually to their neighbor, they're doing better, right? They're doing less than their neighbor in the second scenario. That's how our minds work. That's kind of the American thing.
Yeah.
We're always trying to keep up, and we're always trying to signal to people how well we're doing. It's why we wear name brands. It's why we drive fancy cars. Is to signal to our neighbor, I'm doing just a little bit better than you.
It's funny you say that because I think if I had a superpower, my superpower is the ability to turn that off.
Yeah.
And it's not like I don't feel it when I'm around people that are doing better than me. Like in this job, especially, you get to meet a lot of celebrities and things like that, and they're like their phone conversations are expensive, you know? And I just don't have that gear. I hear it. I know it's a different kind of life, but my gear is like, all right, this is my lane. And you brought up before where you got a $500 credit card and you spent all the money on drinks. I remember the day I turned 18, I was walking through the mall and all these kiosks that are there. And one was a computer kiosk, and I needed a computer to go to college. And they're like, oh, well, here, look at it. Well, you can just take this one here right now, and you just, here's a loan for $2,000. Let's see if you can sign up for it. I paid off that stupid computer, I think like 9 years later. And because the interest rate was so high, and it like wrecked my credit, ruined because I missed a couple of payments. And I always, because of that, I've been so fearful of the loans and this you're just going to hand me money that I don't do that. But I do see people doing that, like especially with my fiance. I have to reel her in sometimes, you know, because she does have it's just natural to have that keep up with the Joneses thing. But in reality, if you can kind of shut that down, stay in your own lane, is a much better move.
Yeah, I mean, who do we admire more? If you really can just take a deep breath and step back, think of the people we admire most throughout history. It wasn't because of the stuff they had, I mean, people like
those pharaoh pyramids look pretty cool.
Yeah,
man.
Those dudes aren't around anymore. But we admire people like who live thoughtful lives, not people who have stuff. And this is a show about wealth, so I'm not diminishing the need for wealth or the need to accumulate some, because as I like to say, money's never going to keep you from life's greatest moments, and it's never going to prevent life's worst moments.
There are sad rich people.
But it makes the moments in between a little bit more fun, right? So, I'm not stupid enough to think, well, we're just all going to live lives of as paupers, but I do think that if we understand what we admire in people is we admire that. I remember there was a running back for the Buccaneers, and I don't remember his name, but his first car, he signed a $3 million deal, and his dad made him buy a used Cherokee. I'll never forget it. It was like 7 years old, and he drove it proudly to practice every day while all the guys around him were driving Ferraris and Lamborghinis. And as we all know, in the NFL means not for long. Most of those guys were gone pretty quick, and they were buried in debt, and that's why the average NFL athlete retires bankrupt. So the more thoughtful story is the guy driving the Cherokee. Now, when he's driving through traffic, nobody knows he's a Buccaneer. Nobody knows he was a first-round draft pick. But when he left football, and I know this for a fact, that guy would continue to do well in other facets of life and in business. So this keep up with the Joneses thing is well known. It's not like you and I are speaking some revelation here. People know this is a thing. And I'm not saying, again, you shouldn't do it to some degree. Again, as you and I have discussed, you like stuff, I like stuff.
Stuff is great.
As Carlin said, other people's stuff is junk and your junk is stuff. I get it. It's cool. But at the end of the day, it's about balance. It's about moderation. And it's about being thoughtful about how you approach your day-to-day finances. And that's what school's not teaching us. This was a long journey back to school, but that is what schools are not teaching us.
Yeah, and that's why your job is so important, Scott. And if you want to get a hold of him, just call. It's easy. You pick up, you answer, you talk to the people, right, Scott?
I talk to the people.
Just call 407-648-1881. That's Edgewater Family Wealth, and you can go to edgewaterfamilywealth.com for more. We'll be right back with more It's Only Money. Welcome back to It's Only Money with me, Ryan Holmes, and Scott Brown, a financial advisor with Edgewater Family Wealth and at edgewaterfamilywealth.com. If you need to get a hold of Scott, it's 407-648-1881. All right, Scott, we did it your way. We did the not so sexy version of money, okay? But, who wants that? I want the ins, I want the outs. And my investing is crypto, meme stocks, and NFTs. How long before I'm rich, Scott?
It's got to be minutes, I would think. I don't really, I'm just going to count you down here, 10, 9, 8, 7, 6. Listen, I don't think any of us really understand what's going to come from blockchain, what's going to come from crypto, what's going to come from, is it NFTs? Am I saying that right, Tam?
NFTs.
Yeah. What's going to come from these things? It's, as I like to tell people, it's not nothing. Something's going to come from it.
Yeah.
Something's going to come from those things, whether it's Bitcoin survives or Ethereum or an artist puts out music via NFT, and I know some are already. So, it's interesting. It's like the dot-com boom, back in the late 90s, early 2000s. It was largely a joke. It was largely ridiculous, but a few things came out of that made some sense. Through all that noise, a couple of things came from that. So I don't think we can yet say, but the hilarity to me is, this is always the funny part, is if I ask you what Bitcoin is worth, what will you say?
$45,000 for one.
Yeah, so what does the sentence end with?
Dollars?
So
U.S. dollars, American.
Right, so if you can't end the sentence with dollars, right? So the theory is, the thesis that people put forth is, well, this is going to be the currency of the future. First of all, it's not a currency, and we'll come back to that. But this is going to be the currency of the future. It's going to replace everything. It's going to be no good. But if you can't say dollars at the end of that sentence, meaning you haven't replaced the U.S. dollar as the world's currency, which someday probably will be true for other reasons. But if you can't say that currently, then what do you have, right? If you can't, because that when it was at Coinbase, Tammy, when they went public, those guys. So those guys all made zillions of what?
Dollars.
Now, do you think they took the Coinbase guys who sell crypto wallets, right? They should know how awesome crypto is, you would think, if anybody does, right?
It's the guys who run the wallets. Absolutely.
There you go. When they did their IPO and made millions of
dollars,
what do you think they did with their money?
Well, I'm going to assume they put it all right back into crypto.
They did not.
Oh.
So again,
I was doing so good at this game,
you
Scott.
were, you blew it right
Ask
there.
me one that ends in dollars again.
Yeah. So without being able to say that, I don't think we know where this is going, right? It's not a currency. We can, again, come back to that. But if a government, so we started off the show about inflation, right? And what do we do about inflation if we're the Fed? What do we do in the United States with our current economic system, whether you like it or you don't? What do we do?
And cut rates.
We cut rates. How do you cut rates on crypto?
Well, you got me there, Scott.
How do you tax it?
Again,
how do you regulate it?
Bad again at this game.
So you're
Dollars.
3 strikes and you're out. Dollars is the answer, right? So you can't run, and I know listeners will have varying opinions on government, whether it's good or bad or whatever. I don't care. The bottom line is we have one. It's somewhat necessary. So if we assume we have to have some centralized form of money and economic regulation, and we have a tool known as crypto that you can't do any of those things with, and oh, by the way, it has huge black market potential and is already being used for that purpose, extortion, drugs, you name it, money laundering, whatever it is, it's not going to continue this way. It's not going to continue unregulated. It's not going to continue untaxed. These things will not continue in this. How it plays out, I don't know. I'm not telling you not to buy it. I actually think it's somewhat interesting as a value store. And the example I use with people is, well, somewhere there's a buddy of mine who has a 68 SS Chevelle in his garage, and it's in primo condition. Can he buy eggs with that? No, not really. You can't take the Camaro down to Publix and transfer, 1,000 dozen eggs into his name.
Yeah,
right?
hard to get that on the conveyor belt.
Yeah, it really is. You can't scan it. It's really awkward for the cashier. So my point is that that's a store of value no different than a Picasso or a Van Gogh, right? These are stores of value, and if the conditions are right, you bought it at X and you could sell it at Y, which is a higher number. That is also true of Bitcoin. That is also true of Ethereum and Dogecoin and whatever. The truth of the matter is, in my opinion, most of those are going to go away. Most of those are going to disappear. And the problem is, like you said, you can get rich on your phone because that's what young people think. They think this is a way for me to get rich, and they think it's a legitimate way to get rich. And now we have celebrities and we have athletes on commercials telling people that this is how they can get rich, and I think that is a crime.
Well, because you can't speak about making money the way that they can about Bitcoin, correct? I mean, there's all kinds of regulations in your business, for better or for worse, but if you're just talking about whatever made-up coin, you can literally say whatever you want.
Nobody gives a crap.
And they get caught all the time in what is called these pump-and-dump schemes, where they'll invent a Bitcoin, they'll get investors for it, and then they immediately cash out.
I mean, isn't that the ultimate irony? And I'm not saying I'm any brighter than anybody else, but with 35 years in this business, I'm licensed. I'm regulated. I couldn't say something crazy on the show. Oh, give me your money and I'll earn you 20% tax-free guaranteed flow. I can't say that. I just did, but for the compliance and regulators out there,
that we good? We can say it as a hypothetical, correct?
That was a hypothetical.
Okay,
it's an example. It's an exaggeration, people. Everybody calm down. But the truth is, I can't say that. And if anybody's qualified to speak to what the potential of an investment is, probably not a bad idea to ask an expert, somebody who's been doing it 35. But I can't say anything. But yet, Matt Damon can walk through a commercial and talk about crypto as if he knows exactly what's going to happen, and nobody cares. Nobody regulates it. Nobody bats an eye, and a bunch of kids go, "Oh, Matt Damon, he's Jason Bourne. I mean, how could I go wrong? I mean, Jason Bourne isn't going to steer you wrong. Come on."
No, it's crazy, but I think of it like the internet. Like the internet used to be this totally unregulated Wild West situation. It took the government 15 years to figure out that everybody was using it, and then started cracking down upon it. That's definitely going to happen to this. Like the government likes to be the one in charge of the finances, So the fact that the regulation is coming and will probably destroy the market. I think crypto can exist in a space, but but not just as this random willy-nilly currency. We're in the Wild West portion, and the West, believe it or not, was conquered, and it will be again in this situation.
Yeah, I mean, and I think, a lot of people say, well, how should I invest? How should I play this? And one of the things that I'm interested in, I'm not saying to do this or not do this, but what I do find fascinating is if you think about the gold rush, right, which there's some parallels there. You think about the gold rush and everybody who went out to California to get rich, who really got rich in the gold rush? What group of people got rich in the gold rush? And it wasn't the miners.
The landowners.
Maybe landowners, but the guys who sold picks and shovels.
Oh, yeah.
Right? So if you're selling picks and shovels, if you're Coinbase, going back to those guys, or your Galaxy or one of these wallets, if anybody's going to make money, it's those guys. And the reason they're going to make money is because the charges are high right now. Everybody and their mother's trying it. And they charge whether you make money or you. They don't care if you make money or you don't make money. They get paid either way to provide the wallet to you, and which, by the way, kind of defeats the whole blockchain idea, right? The whole blockchain idea, correct me if I'm wrong, Tammy, but the whole concept is it's uncorruptible because everybody's on their own computer doing their own thing, and then we all go, cool, let's give it all to Coinbase.
I was confused when all this was happening. I was confused on that. There's a way that you can own your own and have your own wallet, but it's such a giant pain, and you got to know a significant amount of tech to be able to do this yourself without Coinbase. What they're doing is just making it super easy, but then you're the regulator. You're then the thing.
But then you lose all the autonomy, right? Because now it's all in one place. And by the way, it's unhackable? No, not so much, because totally they've been hacked. Numerous wallets have been hacked already. So again, all of the things it was supposed to be, it's likely not. That doesn't mean it's nothing. It's going to be something. I just don't think we know quite yet what the applications are.
And it'll be an interesting and different kind of world when we find out. But I don't think we're gonna be there for the next 5-10 years. I could be wrong. Write this down and then point back to me and say I was super wrong.
Yeah. Well, I mean, I'm not bold enough to make those predictions because I don't know what it's going to be and when
Scott,
it's going to be.
I look at a lot of memes. Okay,
I know.
So I know what I'm talking about.
You're right.
Okay,
stand corrected.
I don't like that I was called out personally on a Super Bowl commercial recently.
Personally.
Well, I don't know if you watched the Super Bowl, but they brought back the E-Trade baby.
Yeah.
And I don't like the E-Trade baby because in that commercial, they at one point they say, "Oh, you need to come back, E-Trade baby. The people are doing bad with their money. They're following memes for their stock advice." And I felt personally attacked.
But the E-Trade baby is going to help you. That's the critical part to that. That like you're buying meme stocks. That's foolish. But let this baby help you out. Yeah. I mean, my favorite E-Trade commercials are the one where there's the goofy guy on the deck and there's beautiful women and they're dancing around and money. I mean, where's the regulation on this idea, right? Is some guy sitting in his basement? Yes, this is what I need. Come on.
I think, and you've talked about this before, it just boils down to there's the good answer and the correct answer is not the sexy answer. And that's okay, too,
as Warren Buffett says, get rich slowly. I think there's value in that. Nobody wants to hear. It's why the lottery exists. It's why Vegas does so well. But yeah, the story's boring. The story is not sexy, but the story works.
The story definitely works, and you'll be able to find out more, and hopefully you learned something today and learn more next week. Come back and join us again on It's Only Money with Scott Brown. He's with Edgewater Family Wealth. You can go to edgewaterfamilywealth.com or call 407-648-1881. It was good to see you, Scott.
Likewise.
All right, and we'll see you all next time.
Yeah, and clearly people are rich, right? Or wealthy. You don't have to be rich. I like the term wealthy better. I mean, to rich reminds me of like the Monopoly guy or something. But, they're people. They're regular people.
Now that guy I trust. You don't see the problem, Scott? You don't have a monocle.
Monocle is... Now, if you can meet a guy with a monocle, I mean, like, I'm all in.
What was his financial advice? He said buy Park Place?
Where is that?
Where is that? I can't find it.
Tune in to It's Only Money with Scott Brown from Edgewater Family Wealth. Sunday mornings at 7 on Real Radio 104.1. Raymond James Financial Services, Inc. Member FINRA SIPC. Edgewater Family Wealth is not a broker-dealer. Is independent of RJFS.